Hey guys, welcome back. In today's video, we are talking about how Citadel just 6 times their AMC shares, the shorts borrowing money, the fake volume disappearing, and many more in this video. First, we're taking a look at this. Dang, these buys just keep rolling in. Citadel joins the 20 million share club, along with another institution having 30 million shares. So if we take a look at the filings here, Citadel just increased their share ownership of AMC to 20.4 million, which was a 637% increase to their previous filing. Now, this is already showing you where institutions are positioning their capital for the next major opportunities. The very fact in the last few quarters, we have been seeing companies buying into AMC, accumulating as much as possible, whilst trying to leverage down on certain positions on certain names. It's already a showcase of what they think is going to come, but also more importantly, what they think is going to shine in the future. Now, another thing about this is that we know that Citadel obviously uses the algorithms, and we've seen in the past when firms are too over leveraged on their short positions, they start to buy into AMC. We've seen this with UBS, especially with the margin problems. It's how they got away with it because they showed everyone that they were long AMC, but now we're seeing the same with Citadel. It gives us many indications of what they believe AMC is going to do. The fact that Citadel is willing to 6x their position means they understand that AMC is due for a massive increase in the share value, but also that their short positions are starting to lose out. Therefore, they need to hedge their positions. Once again, we've seen many examples of this in the past before, but this is just now showing once again how we, the apes, are making a dent towards these institutions, and companies like Citadel have no choice but to start buying to AMC to try and minimize their losses with their short positions. But another interesting thing, which is the timing of this and how it's very important to note, is that previously we saw how Citadel says, prepare for a reload on levered stock bet. And what happened and the storyline was that Citadel forced share prices lower after spreading fake news on rate hikes. Citadel then also shorted Leopold's semiconductor names to get his book penny on the dollars. And we've seen this in the past before, and we talked about this with situational awareness, which was the firm that was held by Leopold, and we saw what happened. And now Citadel says the next meaningful mechanical flow may be re-leveraging rather than de-leveraging. Now, bear in mind, the de-leveraging was primarily caused by Citadel, but now they're saying that you should leverage again. So firstly, we have to understand when these firms are making these statements, they are not doing it for the benefit of the public. They're not doing it for the benefit of people like you and me. They're doing it for the benefit for themselves. Citadel did all of this so that they were able to get shares cheap. They were able to buy other positions from other companies at a very cheap price. And we saw this with what they did with the fake news. Now, this already may seem familiar to you in terms of the strategy of trying to spread certain news to push the price down so they can then buy in for cheap. If that sounds familiar to you, that's because that's exactly what we see on AMC. News being spread around to push the price down, and then the very people who were talking about how this is such a bad stock, how this is going to go bankrupt, are then buying into AMC. This is just another example of that. But then what we are also seeing is how they're talking about the next meaningful mechanical flow may be re-leveraging, meaning increase the volume in terms of buying into these stocks. Now, it's very funny that they say this because whilst they're trying to make this, and it looks like they're talking about whether it's the semiconductor or the whole AI industry as a whole, they're doing this by buying into other stocks. One example, what we just shown with AMC, the fact that they 6x their positions into AMC. So they're trying to put all their attention on AI industry, yet they position themselves into AMC. That already gives you an understanding of what they're trying to do again. The strategy they ran beforehand about this, they're running it again, but this time to try and get people's attention away from AMC. And because they've realized what AMC can do. What we also have to understand is that whilst they're saying to re-leverage, whilst they're saying to increase the volume, we've seen the exact opposite on AMC, where the volume has actually decreased despite all the major news that come out for AMC. But when you start to kind of connect all of these together, a lot of things starts to make sense. And so it looks like the volume issue that we are seeing on AMC recently has firstly been a dry up of liquidity as a whole, but also it feels like it's institutions trying to quietly accumulate as much AMC as possible. If we take a look at another example of how certain institutions were kind of being affected by this whole turmoil and now what their focus is, Jane Street was rattled by situational awareness and the equity market turmoil as it was preparing to issue 14.6 billion of bonds this week to overhaul its debt load. It's a stumble for the market maker that invested early in some of the AI's biggest players. So we saw how they were affected. We saw how Citadel and Griffin tried to, of course, strike these deals. And now we're seeing them start to buy into AMC. So firstly, the firms that were shorting AMC has been greatly affected by the massive AI rally that has happened recently, to the point where they obviously need to now borrow more money. They need to issue these bonds. Secondly, the company that has been using the same strategy on other areas of pushing out news to bring the price down and then going into cheap have now done the same for AMC. So we have a really good understanding and a clear vision of what money is trying to position themselves for, and in terms of what the next major opportunity is. If we take a look at the overall AMC institutional ownership, July was 28%, in August 57%. And this is with volume drying up. So clearly something doesn't make sense, because now we're seeing more than ever that institutions are buying in, yet we're seeing the volume going down and the price barely moving. And if anything, it's actually going down. Now, under any normal circumstances, this doesn't make sense, because if we're seeing the institutional ownership having more than doubled within a month, the volume shouldn't go down, it should only go up. But then, if we are seeing the fact that people are buying into AMC, the share price should also go up. This goes back to what we were saying, how institutions want to accumulate AMC silently and quietly, and in a very secretive manner, because they've understood that AMC is inevitably going to reflect what the true price should be. And we've always known that institutions don't want retail to make money. They only want themselves to make money. So whilst they're making all of the headlines, whilst they're putting all the spotlight onto stocks like the AI stocks, onto memory stocks, onto these photonic stocks, they're secretly buying up AMC. And it really tells us what's going on. Another big reason for why we could be seeing these fake volume disappear is because whilst we are understanding that the volume shouldn't be disappearing, we're also not surprised, because had volume been like this for the very start, when the retail have bought up the entire float, this would have been normal. But we know that synthetics being created into the system, majority of the volume is the synthetic shares flowing. So now if we're seeing a decrease in volume, it means we're seeing a decrease in synthetics. And it feels like there is some sort of reasoning for this. So in South Korea, fake volume disappeared because South Korea forces real cash plus real settlement, and then the leverage ETF volume collapses 90% overnight. Now, the US hasn't done the same, but there are areas where things have actually been the same. So right now, what we have been seeing is, whilst the US is not enforcing real settlement, they are, however, imposing settlement limitations. And this is why we've seen the ETF volume also being affected, because any ETFs that's worth $15 billion or more needs to wait for approval before any settlement can happen. And this is how we've seen that the volume has been affected, because now they can't borrow the synthetics of these ETFs anymore to try and short AMC like they've done in the past before. We've seen this with XRT, we've seen this with plenty of other ETFs as well. So as we see that they have imposed a rule of limiting these ETF settlement, you start to see the volume disappearing. And this is how we knew that for the longest time, the volume that we were seeing wasn't real volume. It was just synthetic shares flowing around, but now they can't do the same anymore. And also, in terms of firms buying up AMC quietly, UBS did the same in the past before, where they acquired just 5% of the AMC shares right before last year's proxy vote and used them to vote no. So this is an example of what we've seen in the past before. Now, what happened was UBS increased their position to 23 million shares, just below 5% of outstanding shares, and hence not beneficial owners. The number of votes was 26 million, slightly above UBS ownership. And when you make the links together, we get what was going on. We've realized what UBS was trying to do. And now with Citadel buying into this as well, is it because they are afraid of what AMC is going to do? So they're trying to run the same strategy, along with the fact they understand where AMC is going to go. We have data to back this. We have data we've seen in the past before. It wouldn't surprise us if they are doing the same thing. Now, more onto UBS, and in terms of talking about the liquidity issues, we've just seen them increase their spot Bitcoin ETF holdings by 230%. Now, for those of you who've been on this channel for a very long time, I have nothing against crypto. However, we have understood that crypto, along with other assets as well, have been used as collaterals to get liquidity to then use it and short AMC. Bitcoin has been one of them. The fact that UBS, who we know was shorting AMC, holding on to toxic swaps of AMC and GME, having liquidity problems, now increase their holdings into Bitcoin. It feels like they're just trying to grab more liquidity, but the very fact that they are trying to do so would mean and imply the fact that they are lacking liquidity. And what reason would it be for them to lack this? Is because of their AMC positions. It's because of these swaps that are extremely toxic that are pushing them down. We're also seeing how other companies as well, like Citibank, who calls for the US Senate to pass the Crypto Clarity Act, another institution who has shorted AMC, who holds synthetic shares of AMC, to now want something that allows the liquidity collateral to become more fluid for them. Another grab for liquidity. We're seeing a big thing here right now. If all of these firms who are begging for more liquidity, for more collateral liquidity, and what they share in common is the fact that they hold synthetic shares of AMC, they hold swaps of AMC, they short AMC, everything starts to become clear and make sense. They are getting dried out by the AMC positions. Whilst it may not look like it, and of course they wouldn't announce the fact that they are being run dry, they are deeply in the red by AMC, by the apes, they are doing things that are showing that they are doing the same thing, that it's exactly what's happening right now. And it's why we see the constant dark pool activity in GME and AMC. Again, infinite liquidity. One of the biggest reasons for why we perhaps are not seeing the price reflecting the fact that people are buying, it's because of dark pool. And the reason why they do this is because of the liquidity issues, it's because of the shorting exemptions and many things, and in terms of creating synthetics. And so the fact that we are still seeing dark pool increasing, the fact we are still seeing dark pool being the majority market volume for AMC, whilst we are looking at all of these things, you start to realize why institutions buying are not having an effect on the price. But it doesn't mean they don't think AMC is going up. It doesn't mean they don't want AMC to go up in the future. It's just for the time being, they want to buy as much AMC as possible, as cheaply as possible, and potentially buy it off of the apes so that they can profit for themselves. And in terms of what they're afraid of and why they're doing this, like we've said, we have been seeing AMC releasing news like this for a very long time right now. And very often, and we saw this news that was released August 3rd, which was how AMC shatters weekend revenue record, sets the highest weekend revenue mark in the company's 106-year history. Now, this is something that we have seen plenty of times already. And this is obviously a very good sign. If a company is able to often break records, then it obviously shows where it's going to go. And we see this, institutions see this, the shorts see this, and that's why they're afraid right now. That's why they're trying to buy up AMC. That's why they're trying to hedge into AMC. On top of all of this, the October 2nd contracts for AMC, you can see the calls are in the money. $3 has 446,000, $3.50, 506,000, $4, 562,000, which will all go in the money when we hit that price. So you could definitely see the effect, the gamma exposure that we can have once we see AMC go to these prices. Now, I do think that it has been acting as a resistance in the sense that because we know and the institutions know that there will be so much gamma exposure when the price go there, they are trying their best to prevent AMC from going to $3. They're trying their best to prevent AMC from going to $3.50. But it doesn't take away from the fact that AMC should be obviously at this price point and of course way higher. But we start to see in terms of in what areas we are able to have that pressure that we can then apply towards these short sellers. Now, as always, this is financial advice, and I'll catch you guys next time.